Stock market expectations versus reality. That is what today's video is about here today, guys. I hope you really enjoy this. We're going to go through 5 different categories. 5 different categories on what is expected when somebody's kind of looking into the stock market and first getting involved, their expectation toward things, and what is actually the reality behind it. As someone that's been in the stock market for 10 years, I thought this would be a very interesting idea. I saw Graham Stephan did a very similar video on real estate the other day, and I saw that video and I'm like, I should do something like that toward the stock market. So today's video should be very helpful to anybody that's kind of newer to the stock market, has been looking into it, or maybe just got involved with the stock market. I think you guys will learn a lot from this video. I think anybody that's an advanced investor will really enjoy this video as well, because you can probably relate to a lot of these things and a lot of these things that people think about and are kind of like expecting. And then once they get involved with the stock market, they realize, oh, things aren't really like that. So hope you guys enjoy this. As always, make sure you follow me on Instagram if you have not already. I've been posting a lot of content on there, especially in my Instagram stories. Let's get into this. You must live off your stocks, right? You must live off the money that you get from your stocks, right? Oh, you don't? Oh, that means you're not successful in the stock market, right? That is a big expectation people come into the stock market with. They think that people like live off of what they make off their stocks, when really I've yet to meet a person in real life who makes a living just off of their stocks, all right? It is so unrealistic. Even the great Warren Buffett doesn't technically live off his stocks. His expenses don't come out of his stock market portfolio, okay? His expenses come from income-related things, all right? So this notion that in order to be a successful investor, that must mean that you must have enough money that you just, you pull out money all the time out of your stock market account and you live off that. And if you want to buy a new Lamborghini, you pull it out of your stock market account, when really that's not realistic at all. And I'll give you a few reasons why it's not, okay? One, if you're going to be at those type of levels, you're going to need to have really like tens of millions of dollars behind you, okay? Even if you have a few mil, it's not going to be enough to cut it, because generally, like, people that make a few mil, they want lavish lifestyles and their expenses are much more, okay? So it's very unrealistic in that realm of things. The other reason why it's an unrealistic thing to ask or expect, when you get in the stock market is, here's the thing. If you're pulling out money out of your stock market accounts, all right, that's less money to be invested, which means less money to compound for you, right? Also, sometimes your stocks are going to go bad for whatever reason. The market's going to go sour or something like that. Your stocks are going to go down, all right? That's just like a fact of being in the stock market. Sometimes your stocks are going to go down. Sometimes all your stocks are going to go down, all right? So what ends up happening sometimes is, if you're forced to pull out money to live off your everyday expenses, right, out of your stock market account, the issue with that is sometimes those stocks go down and then you have to sell at bad prices. No one, any smart investor ever, never wants to sell a stock at a bad price. Anybody that's ever been a great investor, a good investor, we all want to sell at prices that are fair, at least, okay? Or maybe sell at an overpriced valuation, but at least sell at a fair price. None of us want to buy into a stock at let's say it's $100 a share, it goes down to $80 a share, and all of a sudden we're like, shoot, we need to pay for all our expenses, we need to pay for our house and our cars and our meals and all this different stuff, so let's pull some money out of our stock market account and sell these shares that we bought at 100, now they're 80, and we believe they're going to 200 over the next few years, but now let's sell some, because now we gotta, like, it's just so unrealistic. I thought this was the way to go at one point, and my eyes got open and I realized, man, it's not the way to go. Stock market should be for making more wealth, not for living off of, okay? Maybe if you get to such a level where you got tens of millions of dollars in the bank and you can just do it like that and you don't have to put any pressure on yourself to pull out money, maybe once you get to some kind of level, but once again, you get to those levels, I can almost guarantee you're gonna start spending a lot of money, okay? So it's better to have some income streams, and then that way the stock market money can just build. There's like no pressure there, it just builds and it builds, and if stocks go down in the short term, if one of your stocks go down in the short term, you don't need to panic and sell because, oh my gosh, I got expenses to pay. So it's an unrealistic thing. Don't ever expect that from yourself. The stock market should be a place where you add more wealth, not where you're taking out, okay? It's not where oh, I made some money in the stock market, let me take this out so I can go buy stuff now with it. No, that's not the way you should treat it. That's the way you should treat income sources. Create business models, create passive income streams, create a lot of different things around that, and make your own money that way, okay? And then build more wealth through the stock market, all right? Let's get into number 2. You must check stocks all the time during the day, right? You must have like 3 monitors and be checking prices constantly, right? That is another huge expectation from people that get in the stock market. I think it's just from like, they see movies or whatnot and they show traders and they show, you know, oh my gosh, I got 3 different monitors and there's like all these charts and prices going up and down, and that's like the stock market life, when really that's not the stock market life at all. If you're a trader, that could be your stock market life, right? You're always watching chart patterns and like trying to pay attention to everything very close. For an investor, for a long-term investor in companies, which is what I do, where you're looking out several years, you're making an investment in a company, like, dude, like I hardly check my stock prices, honestly. Maybe once or twice during a trading day. If one of my stocks is going crazy, like way up or way down, maybe I'll check it a few more times than that. But on most days, like the stock's gonna go up 1 or 2%, maybe 3%. So it doesn't matter what happens with that stock. Like I have no issue, I have no plans to sell that stock, right? Maybe if I'm like going to sell those shares that day, maybe I'll look more often, but like most days, like there's no reason to look, because I buy into a company and I usually buy over several times, right? I buy into this company, generally speaking, I'm planning on holding that for at least a few years. So the need for me to be checking stocks constantly and like have all these computer monitors, it is so unrealistic, guys. That is only like a realistic thing more for like traders, people who are literally trading in and out of stocks every single day or every single minute or things like that, and are trying to make money based upon just a short-term fluctuation in a price. Oh, that stock went to $5.27. I think that's a good level to buy in. I'm going to buy in at this level and then try to sell it for, you know, $5.30 or whatever. Oh my gosh, I went down and now I got to watch it and see where it's at and whatnot. That's a total different ball game, guys. It's an unrealistic expectation. It's unnecessary if you are an investor to be checking stock prices all the time. Let's get into number 3. Woo! We made so much money today. Let's get out the champagne bottles, baby. We are going to the club. We're hitting the strip tonight, baby. Oh my gosh, we lost so much money today. Oh my gosh, I think I needed to go jump off a bridge. Oh my gosh, this is the worst day ever. Oh, how could I lose all my money? I'm in depression. People have the expectation that the stock market is this place where like you are just like on top of the world, or you're like in major depression, man. And really it's somewhere in between, all right? People that get way too excited over stock market gains or get way too depressed over stock market losses, those people get out of this game real fast. They do not last for the long term, okay? People that start getting emotional about stocks, which if you're getting really excited or really down about, you know, what your account did that day, what your stocks did that day, if you're getting emotional about it, I'm telling you, like, you're not gonna be the right person for this game. Those type of people, they end up going downstream very fast and they get kicked out of the game and they go on to something else, okay? The real players are players that are staying in for, you know, decades and decades. You got to be even keel in this game, right? Because one day it could be a great day, all right? Doesn't mean you need to go pop bottles and, you know, celebrate life, you know, and oh my gosh, I made money today. This is the greatest day ever. Because guess what? The next day, it can take it all away, okay? Money can be made real fast in this game. It can be lost real fast in this game. It just depends on the day. It just depends on the week, depends on the month, depends on the year. Some years you're going to have a phenomenal year. Some years, you know, one of your stocks is going to be a crap stock and you're going to lose money or you're not going to make any money. And you're going to be like, what happened that year, man? I made so much money all these years and then this year just was a crap year. You're going to have times like this in this game, okay, guys? It's just the way it goes. The odds are, you know, you'll have a bad year every now and then. If you're really good in the stock market, the majority of years you have are going to be good years, all right? The majority of years, as long as you do the work, you put in the work necessary, the majority of years are going to be good years, all right? But every once in a while, you're going to have a bad year, a bad week, a bad month. You know, times when your account just goes down. You know, I've had countless days where my accounts are up 5 figures plus and down 5 figures plus. I never try to get emotional about it and, oh my gosh, my account's down 5 figures. Oh my gosh, my life is the worst, blah, blah, blah. No, okay? And the same thing if my account's up 5 figures plus, I'm not, you know, celebrating and like going to buy a new Ferrari or something. Like, it is what it is, okay? It is what it is. You can't get emotional about this game. You start getting emotional, man, it's just a bad situation. And I can tell you, the real investors out there, they don't get emotional. No one gets emotional about trade. You know, oh, that's cool, my stock went up 5-10% today, awesome. Oh, my stock went down 5-10%, that stinks. It is what it is, man. It's an investment you're making for the long term. Maybe if you're a trader, you can get more emotional about things and more frustrated because you're just in and out of position in a real quick amount of time, and money lost is money lost. But when you're looking at it from an investment standpoint, if I buy stock ABC, right, and this stock goes down over the next month, 10%, 20%, I probably bought into that stock for the next 2, 3, 4, 5 years. So whether that stock went up or down 10 or 20%, it doesn't make a difference. What matters is where those shares are at 2, 3, 4, 5 years from now. That's what matters in the end, guys. Let's get into number 4. The stock market is a big casino, man. It's a big freaking casino. You're gambling if you're in the stock market. That's another big expectation what people have when they get involved with the stock market, okay? And it's just not factual, okay? The stock market can be a big casino. The stock market absolutely can be a big casino, but it's the way you treat it, okay? It's the way you treat it on if it's really a casino or not, right? If you go in there, right? You go in there and you're just throwing money at different stocks and you don't really know what you're doing and you don't really have a plan and you're not really making investments, yeah, then you're gambling. You're just throwing money around and you know, you might as well go to the casino at that point and go play the slot machines, all right? Because you're playing a hard game. If you're just throwing money around all these different stocks and you don't really know much, you don't have a good strategy, and you don't stick to that strategy, then you're not doing anything. You're gambling. It is a big casino, right? But if you're treating it as you're investing in companies, it's not a casino if you're looking at it from a long-term perspective, okay? When you buy a stock, you're buying shares in an actual corporation which represents some ownership in that corporation, all right? You're buying part ownership of that corporation. Now, you as a smaller investor, you're probably buying a very, very small percent of that company, all right? You might be buying 0.00001% of that company you actually own. It's a very small percent, but you're still technically part owner of that company. Literally part owner of that company, all right? If you're going to treat it like, you know, buying a stock is a casino game, well, guess what? Everything else in this world is a casino game at that point, okay? Starting a business is a casino game, right? You know, anything, taking a chance on a person in a relationship as a friend or family, that could be a casino game. Walking outside, driving your car is a casino game. You could treat everything as a casino game, right? Everything has risk, but if you're taking a balanced approach to things, right? You can treat your car like a casino. You can drive without your seatbelt. You can turn your airbags off. You can drive all around the roads at 100 miles an hour, swerving in and out of traffic, and you're treating it like it's a casino. Or you can get in your car, you can put on your seatbelt, make sure your airbags are on, drive the speed limit, drive safe, watch out for other cars around you, and you just limited your risk in a massive, massive way, right? There's very, very different things. There's very different ways you can approach everything in life, right? You could start a business, and you could have a plan behind you, you have money behind you, you can have a strategy behind you, you can have people behind you. You can start it that way, or you can just be like, tomorrow, I'm going to start this business and not have any plan and not really have any money, and I started it, I got no customers, I failed, right? You can treat things like it's a casino, or you can treat things like it's, you know, you got a strategy behind it and you got a way of working through this. The stock market is not a casino unless you treat it like it's a casino, and then you can treat everything like it's a casino, guys. So let's get into number 5. Everything in the stock market has to be practical. It just has to make sense. There has to be a reason for everything, right? That stock moved down. There has to be a reason it moved down, right? That stock moved up. There has to be a reason it moved up, right? The fact is, okay, the expectation when you come into the stock market is that everything's practical and everything just works right and everything's correct, and it could not be further from the truth. It's like, yeah, right, that is so not true, okay? Especially when you're looking at it from a short-term perspective. Sometimes stocks make moves up or down that make no sense at all, okay? Sometimes the stock market, you know, behaves very irrationally just as a whole. It'll go up way more than it should. It'll go down way more than it should. Sometimes things literally don't make sense. Not everything in the stock market game is practical, okay? That is something you got to realize right now. You're going to drive yourself crazy in the head if every time you see a stock move up or down, you're like trying to figure it out and piece the, you know, things together, because a lot of times, guys, it will literally make no sense. Like the stock market gets it wrong all the time, okay? For instance, that's what creates such a great buying opportunity for value investors, okay? Long-term value investors, that's how we make money. If everything was accurately priced, if everything was practically priced all the time, we would have no opportunity in the market because everything would always be a fair value and there wouldn't really be any upside. The way we make money is we find undervalued assets that have growth going forward to them, and we buy these undervalued assets, and since they're undervalued, we get to make extra money along the way. Rather than if everything was fairly priced and then you just gotta hope it goes up a little bit here, a little bit there, right? Warren Buffett never would have averaged 20% a year consistently for decades and decades if everything was always, a fair price. It's just the facts, guys. It's just the facts. The opportunity is when things are undervalued, you get to buy them and then sell them for a fair valuation. Or maybe the stock market gets it wrong and that stock even goes up too high and it becomes overvalued, all right? That is the name of the game. So if you think everything's going to be practical, if you're always looking for a reason, I'm just telling you there's not a reason, okay, guys? There's so many times in the short term, the stock market will have a bad day and I'll go on the CNBC app and they'll make up some BS reason on why the stock market's down that day, and then that same exact day, somehow the stock market went up a bunch of points, and then they make up some new reason on why the stock market went up that day. Literally, some days, yeah, there is a reason why, a stock market went down in a big way or up in a big way, but I would tell you a lot of days, most days actually, it's literally like no one can figure it out. Like it's just the way things traded out that day, okay? So there was just more sellers and buyers that day. There were just more buyers and sellers that day, okay? That's how it is, okay, guys? So you can't always assume there's like a practical reason why your stock went up or down on a specific day, specific week, specific month, or even sometimes specific year, guys. It just is what it is. Sometimes the stock market is irrational. A lot of times it's irrational, all right? I hope you guys really enjoy this. Hope you learned a lot from it if you're kind of someone that's newer to the stock market. I hope if you're an advanced investor, you've been in the stock market for a long time, I hope you guys really enjoyed these. These are a lot of the expectations coming in, and then the reality hits and it's like, whoa, things aren't really like this at all. Anyways, guys, thank you for watching. Have a great day.